Hi everyone, my name is Sam Shea. I'm a fourth year at UC Davis. I'm studying managerial economics and I have two minors, one in statistics and one in accounting. So basically I wanted to do an introduction to this course. So this course is basically just going to be meant for anyone who wants to get started into investing any money that they have, or also go into day trading as well potentially. So basically the class will be broken up into fundamental analysis, which is here. So as defined by Investopedia, fundamental analysis is a method of measuring a security's intrinsic value by examining related economic and financial factors. So we'll get into that later. And then, so the second course is basically going to be on technical analysis. So technical analysis is a trading discipline employed to evaluate investments and identify trading opportunities by analyzing statistical trends gathered from trading activities such as price movement and volume. So this is kind of the more graphs that you look at when looking at different stocks. I'll do a research little example here. So we're going to do Apple. And then here, so this is the technical aspects of looking at the different bars, the candlesticks, and also the different lines for the support and the resistance, but we'll get into those later. So that'll be the second course. And then on the third course, we're basically going to cover executing orders. So that'll be how to place an order through a broker, and also what type of order types you should do, and also explain a little bit more about the order book. Lastly, we're going to go over some miscellaneous topics such as trading cryptos, such as Bitcoin or Ethereum, and then also we're going to go over trading the VIX as well through futures and options. Okay, so without further ado, so that's basically going to be the structure of the class. I'm going to try to aim each class being around 20 to 30 minutes. I think that's kind of like the sweet spot of attention, but also detail as well. So please let me know if you have any other feedback in the comments below. Thanks. All right, so what we're going to start with is basically looking up Apple. So Apple Inc., the ticker symbol is AAPL. So if you just Google search AAPL, you will see Apple stock come up, and then through here, this is Google Finance. We're not going to use Google Finance right now. For simplicity purposes, we're just going to go ahead and do CNN Business. Okay, and then we're going to go ahead and filter on the Financials tab. Okay, so here you can basically see the 5-year financial summary. Usually a lot of like day traders, they focus on more shorter term fluctuations of more like day to day. So they'll primarily be looking at quarterly data. But I think for generally buying and holding a stock for a longer period of time, usually you'll do better if you just buy and hold for the longer term, more than a few years. But if you do want to capitalize on any market mispricements, then looking at shorter terms will help you differentiate between data. So it would be more advantageous to look at quarterly data. But for basically the purposes of this class, we're going to stick with only annual. Okay, so revenue is basically their sales. That's basically how much money they're making from selling their products totally. Cash and short-term investments, this is basically how much money the company has, cash available to reinvest into the company, or also put into research and development, or also produce new products, or pay for equipment, machinery, things like that. So basically cash is king in the business world, and it allows for companies to do whatever they want with it. They can also raise more money with cash, cover for interest payments, things like that. But it can be used for anything. So seeing a company with increasing cash over the long run is really, really good, as well as a strong increase in sales as well. Shows that the company is growing really fast. So cash from operations, this is kind of more related to the income statement, which we'll get into. But cash from operations basically means how much it's costing them to how much money they're actually pulling in at the end of the day. So taking into consideration how much money they're investing and how much money it costs them to produce a product, say an iPhone, how much money they're actually making on every iPhone. So that would be considered operations. So operations would not include things like interest on debt, and it wouldn't include other things, more smaller nuances. Okay, so we're going to go ahead and go through some of these. Okay, so for revenues, again, that's why I said we're the sales figures. So you can see here it's fluctuating, it's increasing. It's not increasing a massive amount, so Apple definitely is not a growth company by any stretch of the imagination, but it is still very steady, and you can see it's at 265 billion, which is massive. That's crazy. I don't think there's not many other companies in existence that can pull that much for sales. Okay, and then the second figure down here, we have cost of goods sold. So this is basically how much money it's costing to produce the raw materials. So these are basically direct materials that go into their products. So this would include everything from the screen of an iPhone to, say, the battery, to all the screws, to everything like that. And then from here, you have the depreciation and amortization. This we won't really need to worry about too much, but basically the way to think about it is that depreciation, you buy some sort of really expensive equipment, and then over time you can actually expense it according to GAAP standards. And according to the GAAP standards, you can basically expense it, so it decreases how much money you're paying in taxable income. So that's the purpose of depreciation, but I think for more simplistic purposes, we don't really need to look at that for now. And then here you have, so this is basically like the revenue is kind of considered the top line number. If you move a little bit further down and after you subtract the cost of goods sold and then the depreciation and amortization, you'll get to the gross income number. So this basically takes the revenues and then subtracts these two numbers, and then you'll get this number. And then so there's 102 billion for 2018. That's the gross income. And then you have other expenses, research and development expenses. So those actually aren't as easily attributed to the actual parts or actually the product, say an iPhone. So these kind of go in a separate category just for like classification purposes. So you can kind of see maybe you can differentiate companies to see if they're spending maybe 50% of their gross income or their net revenues on research and development. That means that they are coming up with maybe a new project, a new breakthrough that could revolutionize a whole industry. But as you can see, 14 billion, considering it's less than 10% of the net revenue, you can see that it's relatively conservative. They're not really spending too much money on research and development, so they're keeping their operating expenses pretty low. So their operating income, which is the next line down, this income number is actually very high relative to other companies that may be putting more money into their research and development, which would thereby decrease operating income. Other things we have here, we have credit, interest expense, and other expenses. These are kind of minor figures, so we don't really need to worry about them too much. And then as I mentioned before about taxes and the purposes for depreciation. So the reason for depreciation is that you're basically reducing the amount of money you're paying of taxes. So that basically decreases your net income so your liability isn't as high, basically. And we'll get to liability soon in the balance sheet. So yeah, so once you have the pre-tax income, then you subtract the income taxes that you have to pay. Then you get the net income. This is considered the bottom line number. So when you hear analysts talk about the bottom line figure or the top line figure, bottom line figure usually meaning net income because it's at the bottom of the income statement. And then through here you have EPS, which is the earnings per share. So basically a company will have a predefined number of outstanding shares of equity in their company, and then basically what EPS means is it's taking the net income and it's dividing it by the total shares outstanding, and then through there you're actually receiving a earnings per share figure. So each shareholder would receive $11.91 in 2018 for each share that they own. So if they owned 100 shares, that means that they would have rights to basically $1,191 because they would have $11.91 per share. Okay, and then so the diluted, we don't really have to worry about that. That just has to do with some option exercising and other rights that are given to some managers, but let's not worry about that for now. Okay, so let's go into balance sheets. Okay, so the balance sheet is basically has the assets. So assets are things that the company owns, and then also the liabilities. So liabilities are the things that the company owes. So these are outstanding things that they owe to other corporations or other banks or anything like that. So they include things like accounts payable, money they have to pay in the future, also debts and other accrued expenses. And then lastly, we have the equity that I was talking about before. So this is the total number of shares outstanding that I was talking about previously. And then total equity is how much money in a dollar figure is actually linked to these common shares outstanding. Okay, and then one thing to note is this is kind of basic accounting, but basically the assets equal the liabilities plus owner's equity. So if you have an increase in assets, basically if a company, Apple, goes out and buys a manufacturing plant in China, then the company will go on to the asset side of the balance sheet, but it would also have to be weighted by a liability or an equity. So they can choose either to finance the building with debt, with basically a loan to pay a bank later on in time, or they would actually do a similar to like what an IPO is, but they would basically go out to the market and offer shares of equity. So those kind of offer some pros and cons in and of itself of choosing the equity versus the debt path. So that's something that's we won't really cover in this class because that's kind of outside the realm of that. But basically, for the purposes of this class, we'll just look at the total amount of assets that we have here. So we have the cash and the receivables and the inventories. And so you add all those together and you get $131 billion. You can see it's gradually increasing over time. So that means that Apple owns more and more assets, so that's good. And then also it has more cash too. So especially during a time like the COVID-19 pandemic, it's much more advantageous for a company to have more cash to weather any unexpected expenses or take into consideration any decrease in customers that would have on their business and kind of weather out any unexpected expenses that come their way. Okay, and then you add some other things down here. These are, pretty self-explanatory. Property, plant, and equipment, things that they own. Then depreciation again. So you subtract depreciation and you get this, 365. And then liabilities here, I guess when you're looking at the liability side of a company, you want to make sure that, so companies will have an increase of liabilities. So you don't necessarily want to look at a company that just has no liabilities. There are companies that are out there that choose to conduct their business that way. But I think for the general purposes of this class again, you basically just want to see a increase in liabilities that's steady and nothing that gets out of hand. Because if you have a increase in total liabilities that gets extremely out of hand, and then they don't have the other strong financials of the income statement, say they're not getting as many customers as they would like and their revenues aren't as high, then that would be kind of a red flag. But as of right now, since Apple's growing really fast, they're taking on more loans, which are liabilities, so that kind of makes sense as to why the total liabilities are increasing pretty heavily. Okay, now we're going to pivot to equities. So equity here, so you can see the total stock shareholder equity here is these different billions of numbers. There's not too much change here. So basically that means that the company Apple isn't choosing to finance their projects with equity as much as they are with liabilities. Okay, now we're going to go through the cash flow statement. Okay. So the cash flow statement is actually pretty complex. I think it's much more difficult, in my opinion, than the income statement and balance sheet, which we just went over. So basically it's categorized again to the operating activities. So it's separating operating and then investing and financing. Because basically if the company were to have any sort of investments and actually make money from those investments, those figures the amount that they made from those investments wouldn't be categorized in their income statement, because the income statement is strictly only for their own line of business. So since they're in the business of selling products and also offering services, such as like TV shows and iPhones, things like that, basically what that means is that those would go into a separate category. And which category they would go into is the cash flow statement and then investing. So over here you can see the different increase, decrease investments. So this is basically just how much money they're putting in, how much money they're taking out, or actually the proceeds they're receiving. For general purposes, this language is kind of hard to understand, increase investments, decrease investments. So I pulled up the 10Q, which is the quarterly report. So all companies are required to report earnings 4 times a year. They use different accounting standards, but so their reporting times will be a little bit different, but again, that's getting ahead of ourselves. So now we're filtering on the condensed consolidated statements of cash flows. Okay, and then one thing important to note here is that, so this is the 3 months ending, the quarter ending in December 28th of 2019, and then the year previously as well. So basically what this means is that with each of these columns, the column on the left is the more recent data, and then the column on the right is the more older data. So basically what you want to see is an increase from right to left. Okay, and then for net income, you can see that it went from 19 to 22. These are in millions already, so it'd be billions. Okay, so that's the operating activities. So these are basically just related to operating their lines of business, like I mentioned, the iPhones, the TV shows, things like that, whatever Apple produces and other services they provide. So the changes in operating assets and liabilities. Where was I going to? Oh yeah, so investing activities. So this is a little bit easier to understand. So this is the purchase of marketable securities. So it's the brackets here mean that it's negative. It's a negative number. So it's basically decreasing. So that means that Apple spent $37 billion purchasing marketable securities as an investment. And then the line below that says that they have proceeds of maturities of marketable securities and proceeds from sales of marketable securities in 19 billion and 7 billion. So basically that means that since this is 26 and the top number is 37, that means that it's negative 11, meaning that the bottom line number for cash generated by or used in investing activities will be parentheses 13 billion. So this basically means that compared to 2018, they're spending money and investing money in these marketable securities. So previously compared to last year, during this quarter, they basically received $5 billion because this is positive. But since this has the parentheses around it, that means that it's negative. So that means that they're actually using cash in investing. Okay, and then for the financing activities, we'll just hop on over back here. So these are again the borrowings, short-term and long-term. So short-term's anything under a year, long-term's anything longer than 1 year. And then here, one thing to note too is that Apple is a company that pays dividends. So let's look up the dividend yields. Okay, so hopping over to finviz.com, you can see Apple. Here's a nice little chart here. We'll get into all these numbers maybe later or maybe not. We'll see if you guys want to have more content or more details. But basically what I wanted to show you here is that the dividend is 3.08. And then the dividend yield, which is basically the dividend per share, and then each share is $244. So basically that means that it's just over 1%. So we can see here it's 1.26% as the dividend yield. So all of the amount of money that all of the cash they actually spent on dividends is actually recorded down here in the common dividends. You won't see it in the income statement or the balance sheet. Again, it'll be in the cash flow statement because dividends are paid out in cash. On a quarterly basis, excuse me. Okay. Moving down here, what else do we have? Dividends total. And then here. Yeah, so you can see the financing here. So this is financing for including the debt here, and then also the equity, I believe, too. Okay, yeah. And then so basically one thing to note with the operating cash flow is that you just want to see a positive operating cash flow figure. That means that from their lines of business, they're actually receiving money in. Which is good because that means that they're better able to account for and pay off any liabilities that they have. And so that's what you want to see. If you saw a company that had very low net cash flow from operating activities, then that would be very problematic, and that means that the probability of default will be much higher because they don't have the liquidity to meet their liabilities. Okay. So what was I going to do? Oh yeah. So I was going to do here. So 77.4 billion, and then for free cash flow, you basically take that number and then you subtract here it is, the capital expenditures from investing, and then you have a positive figure of around $64 billion. So what that means is that the free cash flow is $64 billion. So the amount of money that they had, the amount of cash that they had after these capital expenditures, which are mainly like equipment and bigger purchases, bigger assets, things like that, is a very, very large number. Over $50 billion, which is very, very great. So that means that their liquidity is strong and their ability to make payments and operate as business are very high compared to a company, say, with a lower free cash flow has the higher probability of defaulting. Okay, so that about does it for the fundamental analysis parts. Some other things that I wanted to go over. So this is basically the fundamental approach for researching any stock that you would want to see. So this is kind of the more basic way of doing things, more traditional way of doing things. You'll see that you'll note that we didn't actually look at too many graphs. This was just to basically find the dividend yield and the dividend per share. figures, but basically to get into all of these different numbers and to get into all the different lines and everything and the colors, that will basically be technical analysis. So if you're interested in looking at graphs, then technical analysis would be the class to watch next. Okay, so one other thing that I wanted to note is here. So if you go into quotes for CNN Business, and then here you can see the profile. Actually, no, let's go to profile. Okay, so here you can see a company description. You can see what sector it's in, electronic sector, industry, which is the telecommunications industry. And then you can see its market cap. It's one of the largest market cap, largest publicly traded stocks in existence. So it's over $1 trillion, which is massive. That's really great. Other things here. So I wanted to note too, I think, in my opinion, there's a very strong correlation between employee size of a company and also how well a company performs. So usually it's linked to stock price, but basically what you want to see here is the company hiring a consistently strong amount of employees for their company, recruiting good talent, top talent. So you can see here that it's a upward trend, which is positive, meaning that it's a positive signal to buy. If you saw that decrease, then that would be a negative signal to buy. So that's one little nuance. So the next nuance also is that you can actually go to if you go to their websites, Apple, and then you type in investor relations. Investor relations. Here's where you can access the quarterly reports and also the first quarter release, things like that. I won't spend any time trying to find this right now, but you can also find like the board of directors and everyone who's on the management team. So like the CFO, CEO, things like that. One other thing to consider when investing in a company is you probably want to look at their track record. So probably look at maybe their LinkedIn, see what other companies they previously worked for. Maybe if it's in the same industry as a telecommunications equipment, if they worked for Apple or a different industry, you can kind of see their tenure at how long they lasted for other companies or how long they worked for other companies. But I think that would also be a good assessment to track and assess companies based off of who's actually working there. So if you have a strong history of recruiting really top people who have excelled well in the similar fields, then you know that they know what they're doing, and that there's a good likelihood, a high probability of them succeeding in the current company that they're at. So in this case, this would be Apple. Okay. And then another thing also that I wanted to mention for fundamental analysis is basically any sort of strategic advantage or value that the company can actually offer its customers. So basically what this means is that in the realm of electronic equipment such as iPhones and iPads, in the case of Apple, there are a lot of other competitors, like you have HP, Asus, and Huawei, all these different other companies producing phones and also computers, tablets, all these things. So basically the thing that you would want to look for is in a relatively competitive field, you would want to see a company, as in this case Apple, have some sort of strategic advantage or be able to price their products at a premium higher than others. So basically what that would mean is that they're bringing in more money and their profits are actually much more padded than other companies. Because in order to gain market share, you'd basically need to price out other competitors. You either need to go that route, or you can also go the route of offering more value to the customers and kind of maybe marketing, but also designing products in a way that consumers really desire them, so they're willing to pay a higher price for them. I think the best example of this for Apple is actually just AirPods. I think AirPods are a great example because they're pretty functional, but they're not the best sounding headphones on the market by no stretch of the imagination. So, but the reason why they're so popular is because they're kind of the status quo in that everyone's kind of expecting everyone else to have AirPods because they are so popular. So the Apple's ability to create this premium that's already embedded into their brand and this sense of exclusivity for having like this social status of actually owning AirPods and using AirPods, that actually offers them a great competitive advantage and is something that you would also want to assess. So that's actually a little bit harder to assess, but I think by looking at other competitors, so for instance, if you went into like HP's financials and did everything I just explained to you, then you could kind of see maybe Apple's doing better than the others or maybe worse than the others. So that's something to also test.